Good morning to all traders and welcome to this Wednesday's Market Insights video on FX majors. Today is Wednesday, the 9th of September. I'm going to talk about euro dollar, pound dollar, as well as the dollar against the CAD. Different reasons for all of those, but starting with the main headlines for the day, of course. Well, it seems that the US wants to decouple from China now. This seems to suggest that tensions between the two are getting worse, and that's going to be the case, and probably the US's stance is going to get even harder as we head to the elections. That seems to be supporting, well, there's been a sell-off, generally speaking, and there is risk aversion now. However, gold is not still being supported. We've seen actually all the flows going into the dollar, and for that reason, most of the majors are weaker against the dollar as we speak. We did have news that AstraZeneca has halted the test for coronavirus after a sick person has suffered a suspected reaction, and that is not good for the markets. Of course, it would be good eventually for the gold, but we wait to hear what's going to happen as the tech sell-off and also the market sell-off, generally speaking, continues. Now, we do know about the Brexit. This is the 8th round, actually, that the Brexit talks continue now. They don't really go as well as some would have hoped after Mr. Johnson's consideration to inflict even more friction on trades between the UK and its biggest markets by going for no deal at all. That, of course, adds on yesterday's Northern Ireland hard border risks, and despite the fact that the UK government has already admitted that they will be breaking international law, well, Boris seems to be just going his own way. And don't forget that we've had also the resignation of Jonathan Jones, the government's lawyer. Now, that, to me, seems to suggest that, well, he really thinks that the government is about to break the law, right? And that is not going to go down well, as the UK is showing more and more signs that they would prefer an Australia-style trade deal with the European Union. I'm going to go and start off with the euro dollar because we have quite a few scenarios to look at here, so I'll try to be quick. Well, I'm looking, mainly the differences are over here, right? We've had 1, 2, wave 3 done, ABC for an expanded flat in wave 4, around 116.13, and then all the way up for wave 5. I want to see the 121.50 taken out because this is the 78.6 Fibonacci retracement of the long-term bearish leg down to the 106 or so. That is one of the scenarios. Now, I'm also looking at this as, well, as already ended scenario, perhaps 3, 4, and then the 5 with an ending diagonal, okay? Because we're still we're still looking impulsive on the downside, right? So it could be an A, B, C, and continue higher, or it could be 1, 2, 3, 4, and 5, and that would suggest that we actually done up here, and then this low is going to send us back to the previous lows of 106.4. The other scenario I'm looking also, well, likely to end soon, complex correction here, okay? We're expecting another wave to the downside, the wave C. This would mark wave 4, around 115.60 or so, okay? Or anywhere, it could even be around 117. But what, I mean, the moment we break the 115.16, that would indicate further downside. Otherwise, most likely going higher for another move to the upside to complete wave 5. I'm also looking at this opportunity for this to be triangle. That would indicate this is 1, 2, then 1, 2, 3, 4, 5. That will be 4 and then 5, yes, and then that would be primary 5, excuse me, but also cycle wave 1. Okay, that would indicate there was going to be a decline, but then it will be only correction, and they will continue to fresh highs. Now, if you want to get a better view on this, this is where I'm looking, right? So A, B, C, D, and E, we ended down there, and we're moving up. That is, of course, going to be the long term a very big opportunity. Now, jumping quickly on pound, we talked about this being an ABC, right? So we are now in, well, this is wave A done, right? So we're going up for wave B. This is 1, 2, 3, 4, 5 of A, okay? So we haven't done wave 1 yet. We're looking at this as 1, 2, 3, 4, and 5, and then we're going to get 1, right? And then we're going to get 2, 3, 4, and 5 for A, and then we're going to get the B and the C for to complete the primary, the cycle wave B, and then we're going to move lower. So this, although it's still very early in the process, if that is a scenario that we're looking to play, then we need to stay above the 126.50, right? And then from there, the upside is looking to over 140, to be honest. Now, another close scenario is that we've actually moving in a triple zigzag over here. That means this is an ABC, and we ended up here. And now we're actually going to move lower for wave Z, okay? And another scenario would be that, well, again, as similar to the euro dollar, this is a triangle. And down here, 1, 2, we have 1, 2, 1, 2, 3, 4, 5. That's going to be 4 in the intermediate degree, and then 5 for primary 3, then 4 and 5. That also sees more upsides in the longer term. Now, dollar CAD, since we didn't do wave 2, okay, I'm still looking at this with a corrective eye, right? So this is an ABC ending diagonal, right, in wave C. That's what I'm looking at, which means this is 1, 2, 3, 4, and 5 for A, then we're going to get B, and then we're going to get C. And this is going to end up here around 150 or to at least the 146 from down here, right? That's one of the opportunities. The other one is looking at this as a triangle. So you see A, B, C, D, E. We're not done with wave C even just yet. So we've done wave A of C. We're expecting this correction to end wave B in the intermediate degree, right? Over here around the 136 or so. Then we're going to get C, D, and E in the longer term. And the other scenario I'm looking for dollar CAD is that we've had an ABCD triangle ending up here with a false break. And now, of course, this is the first wave of a correction to the downside. So it's going to be, this is B, right? And we're going to get the C wave. So that's going to be an A, that's going to be the B, and we're going to get C down. That is, of course, again, indicating more upside in the short, medium term, but not in the long term, okay? So I hope that was helpful. If you have any comments, if you have an alternative scenario in mind or a question, please do not hesitate to comment, and I'll get back to you as soon as I can.